and welcome. It's another trading day right here in Lagos, Nigeria. We see markets already reacting to what's playing out globally. Here's what's coming up in the next 55 minutes. All is set as Nigeria hosts the 32nd annual general meeting of Afreximbank in Abuja. The Nigeria wooed Brazil investors as trade between both countries plummet from $9 billion to under $2 billion. The Nigeria stock market all-share index hits a new high as price discovery continues. And it's great to have you join us. I'm Ladi Williams. Let's get a check on what's playing out with the markets that we track. Starting with oil, we're seeing oil prices continue to climb from earlier today as investors assess the stability of a ceasefire between Iran and Israel. While support also came from market expectations that interest rate cuts could happen soon if the United States, the world's largest economy, actually sees some progress there with inflation. According to the U.S. Fed chair there, $67.68 a barrel. That's for Brent. Trying to recover. Maybe we might see $70 again this week, possibly. WTI crude, that's U.S. grade, $64.90 a barrel. A bigger 0.82% jump there. That's for WTI. Let's get a check on the metals market now. We see, still red, still mostly red. Platinum, that's the one only in the green, 1.8% up, $1,317. And we're seeing gold there. Continue that downward trend that we saw yesterday. $3,316, down 1.5%. That's for spot gold. U.S. gold futures down 1.8%, $3,333 per ounce. And we see spot silver, a big 0.8% drop. So it's mostly red there with most of the metals that we track. Let's get a check on other commodities now. That's talking about cocoa. Let's see what's happening with those prices. Joining us now to discuss, we have Jamiu Tajuddin, is a procurement executive at AHA Agro Nigeria Limited. Great to have you on the show.
Yes, thank you. Thank you for having me.
All right, so what's the current sentiment in the global cocoa market there? We're seeing the reactions we're seeing with oil happening with cocoa, with geopolitics.
Okay, so the current trend I can talk about now in the global cocoa prices kind of presents a significant economic opportunity for Nigeria. As the world's fourth largest, producer, Nigeria stands to benefit from increased export earning, improved farmer income, and a potential boost to rural livelihood. The surge is largely driven by supply constraints, challenges, and labor shortages, and disease outbreak affecting youth. So for Nigeria, basically, I would just say this price rally could mean, three key things. You understand? So this could mean like increase in, foreign exchange earning. With cocoa being a major oil exports, higher prices can help improve Nigeria's trade balance and then bring in, much needed foreign currency. In terms of incentive, it could also bring incentive to invest in the sector. Higher margin.
All right, sorry about that, Tajuddin. Like we're having pauses there with the connection. I'm struggling to hear you, but yeah, I did get the message there, Jamiu. Thank you so much. It's all about price movements at this point, and how can Nigeria take advantage of the price action we're seeing with cocoa, and maybe also playing in that chocolate business. We'll definitely keep tracking that. That was Jamiu Tajuddin, their procurement executive, AHA Agro Nigeria Limited. Thank you for coming on. All right, so other matters now. Amid ongoing debates about smuggling and cross-border trade challenges, Mr. Salami Alashodua, a prominent customs and trade expert, has dismissed claims that Nigeria's borders are porous. Instead, he urged policymakers to personally assess border operations to identify the real bottlenecks stifling legitimate trade. He was a guest earlier on Business Morning. Take a listen.
When you are talking about cross-border trade, you should know which border you are sharing with your neighboring country. You are talking about that our border are porous. Yes, our border are porous, but I disagree. We did not have infrastructures put it in place. I was asking a question for those who are in the top. I asked them a question. You are talking about formalizing trade. When do you go to Seme border? When do you go to Shikanda border? When do you go to Kilibo or Kerete border? When do you go to Megatari borders? When do you go to Banki border? To go and listen to the problem. The security challenges is poverty, injustice, lack of infrastructures. And then you don't talk about trade when there's no security, when there's no infrastructures, when there's no electricity. You cannot be competitive. When you are talking every time, talking, story, recommendation. No. If I'm lying, let the committee from Abuja, let them come to Seme next week. And let them go and do the assessment on Lagos-Abidjan corridors. And tell me this is the infrastructures they have put in place. Where is the way bridge? Where is the scanning? So if we did not put proper infrastructure in place, we will continue pashi-pashi. You know what we call pashi-pashi? You will continue turning up and down.
All right, we'll take a break now. When we come back, we'll discuss what's playing out in the real estate market in Nigeria. That's in a moment. Just stay with us. All right, so our first conversation now. Nigeria faces a severe housing shortfall with estimates ranging from 17 to about 28 million. And that's depending on your source there of where you get most of this data. Despite ambitious public schemes to get, affordable housing, we're still seeing that big deficit. They're helping us to unpack this today. We have Mr. Remy Oshinkalu, who's the MD, IFT Realty, joining me right here in the studio. It's great to have you.
Great to be here. Thank you so much. Good afternoon.
Yeah, so is this housing matter again? And, definitely if you're someone that was active in the real estate market maybe about 5 years ago or 6 years ago, you'd notice that you could, buy a property maybe somewhere around Chevron, Lekki, the full duplex for about 50 million, about 60 million, but that's not the case. Right now we're seeing incredible prices, for real estate, and that's happening with rentals too. And there's also this issue on social media where you hear some of these influencers, social media, talking about some real estate companies selling receipts to people and not land. What are you seeing?
Well, it's thanks for having me again. It's a sort of complicated but not complicated matter. So the guys that are talking about people selling receipts and bad players in the real estate development space, they're correct. But that happens all over the world. You have good actors, you have bad actors. The challenges that developers face, however, in Nigeria are also unique to Nigeria. So if you're coming up with a development, let's say in the Bejuleki scheme area, you have to do your own roads. You have to sand fill. You have to bring in your power. You have to bring in your security. You have challenges with Omonile. So all these things have to be factored in.
And that's the cost.
Those are costs. And so once you incur those costs, you end up having to transfer them to the purchaser. But in terms of the real estate deficit that we have, if we use the top figure, 28 million, Nigeria has, let's use the top figure for Nigeria as well, of 280 million, if we're that many. So that's 10%. So there's no way private developers can bridge that gap. If you look at the history of Nigeria, we had LEDB that was founded in 1928, Lagos Executive Development Board, where, schemes like the Surulere scheme came out of there. If you look at the Shagari era, we have Shagari Estate, we had Gowon Estate in Ekpaja, we had the Bodija scheme in Ibadan that Awolowo built. These things, the only way you can get
I believe we have a renewed hope
Yes.
scheme
Yes.
right now.
Yes, we're aware of that, but the government just has to do more. Government has to come in to provide land and then bring private developers and partner with them and provide mortgages. And that's really the key. Single-digit mortgages by the government to ensure that we could, and they must have an ambitious scheme. Let's say we want to build 1 million houses per state, for example, in the next 4 years. That only gives us, a significant amount of houses, but you would have to scale it up.
Right, and talking about mortgage, at this time we're seeing, central bankers globally, they've had to struggle, to bring down inflation. We see some countries winning, with their inflation numbers, but they've had to raise rates, and now there are calls for, rate cuts in the U.S. and, some other parts. But here we have elevated interest rates, and I'm wondering how that plays into mortgage. If we actually get a developed mortgage scheme here in the country, if the rates stay at this level, does it change anything?
Yes, the kind of rates that we've seen in the market are not comparable to any way that I've seen. We're not even talking about double-digit schemes. If you go out to try and get a loan here, we're talking almost as high as 30%. If I'm building a 10 million naira house and I'm paying 30% interest or 25%, it's not sustainable. To bridge the housing, let's forget the Lekki and the houses for people that already, yes, for the big guys. Let's go down to the brass tacks. If you want to do business and bring down the housing deficit, government intervention by developing new schemes, partnering with real estate developers, and providing special vehicles, mortgages that are specifically drawn up by the central bank and the government to target this deficit. Anything outside that, the private developer is in trouble, because if the private developer goes to borrow at 30% and you put in a 1 billion naira sort of stock, you're already owing 300 million if you got a 30% loan. You pass that to the buyer. And then we have the challenges of power, we have the challenges of infrastructure, we have the challenges of the Omoniles and all these other several governmental agencies that come to play. So it's tough. It has to be a deliberate government effort, partnering with private sector.
Right. And, talking about raising capital, at this point, what trends are you seeing, so far, since we're seeing it's quite expensive to get, loans from the banks? What are developers doing, at this time to get funds?
What I found is that the Nigerians in diaspora are the ones that are actually keeping a lot of these things afloat, a lot of businesses, because, so if you're in the diaspora and a developer is able to put together a scheme that is attractive to that individual, then and they give them a payment plan. So developers are now turning themselves into financiers. They would have to say, I'll give you a 1-year payment plan or a 24-month payment plan. And some are even doing very well with 60-month payment plan. But this is not the role of a developer. This is the role of a finance institution.
Because the developer is not that patient.
Exactly.
It's not patient money.
But for the developer to be able to sell down, they would have to give some sort of incentive, which is a payment plan. And this is where those issues come up, where they're selling receipts, because the developer is also hedging. He goes to buy land, he hasn't perfected the title, he's trying to get money from prospective buyers. But if they were just very transparent with it and say, look, we just have registered survey, this is not good, it's not perfected title. Do you want to come in almost as a partnership? But they don't do that. They just say, look, we own this land and we're selling to you, and this is where all these challenges come.
And in some cases, they don't really own that land.
Yet.
So
that's the challenge. So what happens is there's this huge tract of land in, let's say, Mowe or Fada. You went there, you spoke to them, you spoke to the Omoniles, you signed the agreement with the Bales, but you now have to deal with the government, whether Ogun State or Lagos State. So some developers will now say, let's raise money from sales prior to perfecting title, and they want to use that money to perfect titles. Now, if everything works well, everybody's happy. but sometimes things fall apart.
Right.
And then
you don't have the influencers
yes.
on social media calling out,
yes.
some of these companies.
Yes, and some of these call-outs are not legitimate. I will tell you that. Some of them are just situations where people are in a contract. Let's say you have a contract to buy a property and you should pay for 1 year. If you default, your contract says you lose maybe 25%. People now use weaponized social media in order not to honor their own contracts. And they'll just say, no, this developer is not giving me back my money. So I want to encourage the social media influencers to also take some time to ensure that before you pull someone down, you sort of look at all the paperwork. It's not always the case.
Right.
Now, there are bad players, there are bad actors, but there are situations where the developer is also the victim.
Right. So let's imagine I'm a prospective investor and I'm trying to buy land. I don't want to buy, where land is really expensive. So they take me to the outskirts, and obviously we have all of these issues with maybe not fully owning, the property. So what's the first thing I do, when I'm, being sold a land, the outskirts? I don't know what to expect, going forward. What do I do first?
Yes, I think it's such a fantastic question, and I've been preaching this everywhere I go. The challenge we have in Nigeria is we came from an informal ethnic sort of background, where my father owns the land, there's no survey, if you point to that tree, from this tree to that tree. So we've continued with that system. Lagos State is leading in changing that system. They're trying to digitize everything. They have their own challenges, but they're really putting in place things that would work. So, but for us as traditional people, I shouldn't just come to you and say, hey, laddie, I'm buying land. That's not your area of expertise. So I advise people, if you want to get into any land transaction, get a lawyer. Retain a lawyer. Don't cut the cost in terms of a lawyer. Now, what's the first thing that you should do? But if you get a lawyer, they will do that. You take the survey of the land that you're buying, and you go to the Surveyor General's office, and they chart the survey. And the Surveyor General will let you know whether the land is subject to acquisition or it is free and clear of all encumbrances.
Well, let me just take you back a bit. How do you choose the right lawyer? Because I've seen cases where, you get a lawyer to do search and all of that for you, but the land still ends up bad, and the lawyer okays the land.
Yes, so these are, you see, we're still in infancy. So I live in the US and I do business in Nigeria. So we have a system which we have been trying to encourage here, which is called title insurance. So when you want to do any real estate transaction, you get an attorney, a lawyer, and then you also get a title company that will do the search. And they will do that search, but they will issue you title insurance so that if you build and things fall apart and you discover that there's a challenge, the title company, which is the insurance company, will now have to pay you. What we are doing here is just wild. We're just, people are not using professionals. If a lawyer does something, there's a disciplinary committee for the bar. But we don't use that. If a surveyor does something, they have a surveyors association. But we make it almost informal. Oh, Baba Kunle, Baba, you go to your church, you go to your mosque and say, sorry, God forgive, just, you didn't do it purposely. So we have to start formalizing the economy properly. And this creates employment. One of the questions is, how does the real estate sector create employment? Imagine if every real estate transaction you had a lawyer and you had a surveyor. The
lawyers get paid.
They get paid. The surveyor gets paid. The agent gets paid. The people that do the search, the expediters get paid. And then the real contractors and the suppliers. And imagine if we started building just 2 million houses in Nigeria to be delivered by the end of next year. The multiplier effect, the woman that has a bakery, the woman that cooks food, the bricklayers eat, the pure water person. At our project in Shalom Park Estate, We have somebody that just comes to cook for everybody, and so it's a multiplier effect that will help the economy.
Quite a big value chain.
Yes, fantastic value chain.
There, and definitely we're hoping that people, because at the end of the day, if real estate is so expensive, that means you're having to put a lot down, to get in.
Yes.
It'd be terrible to get scammed.
Yes.
When you're trying to make such investment. But we'll keep, the conversations, going.
Thank you very much.
Thank you. It was great having you.
Same here.
Today. That was Remy Oshikanlu's MD, IFT Realty. Thank you for coming.
Thank you very much.
All righty then. So we see as Afreximbank begins its 32nd annual meetings in Abuja, we see Nigeria's central bank governor, Mr. Yemi Cardoso, is full of praise for the role which the bank has played in Africa's economy over the years. Let's see if we have that track.
The theme of today's session, 32 years of resilient growth and transformation, could not have come at a more auspicious time. It speaks directly to the essence of this institution and the road of travel of our continent. Today, we gather to reflect on and celebrate the journey of Afreximbank over the past 3 decades. Afrexim has emerged as more than an average financial institution. It has become a trusted partner, a convener of ambition, and a catalyst for change, shaping strategy, enabling execution, and elevating African agency across the globe. Distinguished guests, it has already been mentioned that Afrexim was born in Abuja in October 1993. The founding mandate, may I say, was bold and transformative: to finance, promote, and expand African trade at a time when global financial institutions were retreating from our shores. The visionaries, and we're happy to have some of them here today, who midwifed its birth, understood that Africa required a dedicated institution rooted in the continent and responsive to its peculiarities to unlock its latent potential in both intra-African and global trade. Over the last 32 years, Afrexim has grown from modest beginnings to become a symbol of African financial fortitude. From an initial capital base of $750 million, relatively small amount by international standards, the bank has expanded its capital assets to over 40 billion US as of the end of last year.
All right, now to our next conversation. We see there are nearly 40 million project professionals worldwide today, and by 2035, the talent gap, the projections that could reach up to 30 million more. The annual increase in the gap is outpacing the average growth of global economy, and the PMI talent gap report that underscores the urgency of reskilling and upskilling to close the deficit. And I will speak to George Asamani, is the Managing Director of Project Management Institute, Sub-Saharan Africa, on the importance of project management skills in Africa. Great to have you on the show, Mr. Asamani.
Hi, thanks for having me. I really appreciate it. How are you?
I'm fine. I hear you're all the way in Beijing. How's it there?
Yeah, it's going really well, thanks. Yeah, we've just had some And, you know, it's really, really important as Africa to be able to Africa is that we've actually led a delegation from Sub-Saharan Africa in academia, and you know, we've all come to China, to Beijing specifically, to meet our counterparts here and just to explore, share ideas, and discuss project management at And, you know, it's really, really important for us to be able to execute at scale whilst maintaining quality and, more importantly, whilst making impact in our region. So here in Beijing.
All right, so we see the PMI Talent Gap report projects that Sub-Saharan Africa will need between 1.6 to 2.1 million additional project professionals by 2035. What's driving this significant demand in the region?
We have 2.6 million project professionals, and based on our demographic growth, the fact that our population is growing, the fact that economies within Africa extraction or not only focus on agriculture. Those things are important and those things should be focused on. But in addition, companies and countries want to diversify, right? Want to be able to do what we're doing now and more. So when you couple, economic diversification, couple that with our demographic growth, the fact that we'll have the largest labor force Africa for many years now has been seen as quite an investable place. So all this, when you add all this together, it means that there's a need for more projects, and actually there's an interest in more projects, and therefore there will be a need for more project managers. And so this is the analysis and the explanation of why we're going from 2.6 million project professionals and 4.6 million in 2035 in 10 years time. So that's almost a 75% growth. And so we don't have the number or the quality of project managers that we need in the next 5 to 10 years. What that means is opportunity cost. What that means is that critical infrastructure economies and also hinders some of our basic needs as well. And so this is really.
All right, so sorry, Mr. Samani, they was trying to, break this report down to us, but we're seeing the internet connection is not allowing us enjoy this conversation, but we'll try and have it another time. Thank you so much, Mr. George Samani is the MD, Project Management Institute, Sub-Saharan Africa. We'll try and jump on this conversation another time to explore what's in that report. But we'll take a break now. When we come back, we'll head straight to the markets. Just stay with us. All right, let's head straight to the markets now. We have Will Ibong with the details, and she's going to tell us who's making money and who's not.
Oh, well, Laddie, I can tell you for sure that the NGX investors there are happy. So, as in, like, we hit a new record high at intraday 120.
Euphoria
it's like
there.
every time I come here, it's like I'm announcing one record high or the other, and I'm
Price
like,
discovery.
okay. Yeah, it's more like, okay, but the point is now, are we at the peak level?
Where's the peak?
Yes. Are we still going up, or
because nothing goes up forever.
Like Abdul Rashid
Not that I'm
always
a bear
says
or
that.
anything.
Abdul Rashid always says nothing goes up forever. Once it goes up, it's gearing up to go down and then gearing up to go back up. So let's just see if markets will sustain this positive momentum. But I am, happy
because
about
I'm wondering where's the resistance, at this point, because it's price discovery. These are uncharted.
Territories, waters that and everyone is quite surprised and everyone is be cautious, but everyone is happy at the same time because this is something new for the NGX, and that we want to keep going forward with this, and hopefully we'll hit 150, and maybe we'll be talking about 200,000 points.
200,000. Incredible.
So markets, major equities in Africa were mostly positive at intraday. Nigeria's NGX hit a new record high. As I mentioned earlier, it's back-to-back now for NGX. It hit 119 points yesterday, that's Tuesday, and today we see it crossing 120,000 points. GSC in South Africa was trading lower. However, on the flip side, 0.32%. We see Egypt's EGX also in the green at intraday, 0.57% up. Nairobi Securities Exchange closed Tuesday's session in positive territory, settled at 1.19%. Now we just want to know what's going on at the NGX. This euphoria Ladi mentioned was driving it, and we have Abdulrasheed Momo's equity trader, TLW Stockbrokers, joining us to share the insights and the behind the scenes, what's happening with equities. Good afternoon, Abdulrasheed. It's good to have you on.
Can you hear me?
Abdulrasheed, when we spoke in October last year, you did forecast that the index would hit 125,000 points. Were you expecting it so soon?
Not at all. I did say 125,000 points, but I didn't expect it to be so soon. It's with this kind of momentum, it's so scary.
Oh, so what do you see now? So what's driving this positive momentum as we speak? Is the market? Go ahead.
Well, so many positive things have been going on. Even apart from the market, most of the financial instruments that we come across lately, even from so even the equity markets too, there's so much funds in the equity market, and these funds seem to be looking for every stock to buy.
Okay, Abdulrasheed, I think we're having some technical issues right now. Basically, we're just seeing also yesterday we saw Oando posting profit after tax for the Q1 2025. We saw it coming at 113 billion naira, and they're back to profitability. Oando, speaking to Abdulrasheed some time back, he did mention that Oando might hit 100 naira, but we'll see how that works out for investors. But we're also seeing that, this coming as the company posted a pre-tax loss of 52.5 billion naira, but compared to the pre-tax profits of 70.3 billion they had in the first quarter of 2024. But we saw that swing to net profitability, and it was driven by that substantial income tax credit of 165.6 billion naira, which was more than enough to offset the loss before the tax. Now, revenue for the quarter for Oando stood at 932.5 billion naira, and that's about 1.9% increase from 915 billion naira they had in the previous year. But let's look at other stocks in Africa, in the Middle East. We saw major stock markets in the Gulf. They rose on Wednesday on course to extend the gains from previous session when they registered sharp gains following a ceasefire between Israel and Iran. Now we see in the market, Dubai is up 0.49%. Abu Dhabi is up slightly, 0.02%. Still within the region, Saudi, that's the Tadawul index, was in negative territory. The lone loser there, 0.03% down, and the Qatari index is up 0.72%. Now let's check in on other markets like oil prices. We're staying there. Oil prices climbed as investors assess the stability of the ceasefire. And this support also came from market expectations that U.S. interest rate cuts could happen soon. Now, Fed decision affects monetary policy in the Gulf region, where most currencies, including the Saudi riyal, are pegged to the U.S. dollar. Let's look at the U.S. now. Stock futures performed today in early markets. There were little change early today in pre-market trading, with S&P 500 hovering just under its all-time high. Dow futures dipped slightly. We see it down 0.08%. S&P 500 and NASDAQ futures edged up. Well, we say S&P in flat region, positive, but the NASDAQ edged up 0.12%. Oil prices, as mentioned, dropped sharply, but we see it recovering today after that ceasefire news, and the investors are still watching it closely. But let's look at other markets in Asia now. Asia traded mixed on Wednesday as investors, assess the U.S. Fed signals and the Iran-Israel ceasefire brokered by President Trump. Japan's Nikkei, we see it rising 0.39% close today's trading session. Kospi in South Korea up 1.5%, and the Hang Seng index in China is also up 1.23%. But we look at China, mainland China, that's the Shanghai index. It gained 1.04% as well, as sentiment improved on signs that the ceasefire may hold and global risks are easing very quickly. But slowly, maybe not so quickly. But India's Nifty 50 also closed in positive territory, 0.8%. Ladi, we've seen that mixed caution there, as well as mixed sentiment, cautious buying and cautious optimism from investors that, whatever is happening here, there's an ease, there's a ceasefire, but how long will this last for? Is it temporary? Is it, going to be sustained? So that's the caution that investors are approaching the markets now, especially oil coming back up, but just ticking up there slightly. But
right.
We don't know.
I'm wondering if oil is out of the woods yet.
Yeah, we don't know yet.
At this point, because
especially, the region, the Middle East is known for oil, production, and that's basically their mainstay. But we can't say how this is going to play either ways, if Iran or Israel is going to, come back with more strikes.
Right. Hopefully nobody violates
violates the ceasefire
at this point. And it's quite interesting also what's playing out in the U.S. You will see the U.S. Fed chair there yesterday. They did, have conversation with Congress.
Yes.
Very interesting conversation.
True.
And he couldn't commit
to a rate cut. No, he couldn't.
In 2025. So, and seeing what's playing out with other Fed members. We're seeing the hawkish Fed members actually looking at, turning dovish, at this point. So
I think it's from the pressure. I think everybody's going, buckling down right now, because you see people in the House trying to, make them say, why don't you want to cut rates? And, who's going to bear the brunt of this tariff? You say tariffs are going to feed into inflation and make inflation go higher. So how is this going to impact on consumers and possibly small businesses? And they were trying to explain that. I think that's what the standpoint that Jerome Powell is on right now, that look,
he's cautious.
Yes, he's very cautious. It's not just going to hurry and cut rates and then the economy is going to suffer, because that's why he says he wants to leave a legacy. The economy is going to pass on to his successor, is going to be a stable one.
Right, and I'm wondering if we didn't have the tariff, fears and, what's playing out with geopolitics at this point, I guess he'll be more confident.
Oh, of course.
That's Fed Chair Jerome Powell to actually cut rates.
Cut rates, but right now he doesn't know which way it's going to go, how tariff is going to hit the economy, and also what the Middle East tensions, how it's going to impact, the U.S. economy. So it's going to keeping an eye and keeping the track on the macros and keeping on the trends.
And with so much pressure coming from, President Trump, on him, he's been called different names.
I feel for him.
At different points. There's so much pressure on him.
Too much pressure. But it was holding his own yesterday. You could see him confident, not bowing to the heat, and not, he was just confident and trying to explain what was happening. And I think he's going to, well, I hope
just telling them be patient.
Yeah.
I'll cut rates when it's time. When I feel it's time. We'll definitely keep watching out for that. Thank you so much, Will, there for the details. But let's see if we can find out what's happening in Europe. Let's take a look at European markets. At this point, we have DW correspondent Chiponda Chimbelu. Let's try and see if it works this time. Hello, Chip.
Hi, Lottie.
Yeah, it's great to have you, Chip. So how are European shares trading?
$600 is down around 0.3%, and Germany's DAX is also trading lower, around 0.4 to 0.5%. Now, investors are, of course, assessing developments around the ceasefire between Iran and Israel, and there might be some doubts about the stability of that truce. It is worth also noting EU and the United States is July 9th, and it's still actually unclear whether the substantial progress has a little bit subdued, especially after the stock 600 had its biggest single day jump in over that Israel-Iran ceasefire, Ladi.
Another topic in Europe now, we see NATO member countries are gathering, in The Hague, where they're set to, sign off on an increase in defense spending there, following pressure from the U.S. What's the latest there?
Well, U.S. President Donald Trump has also spoken, and he said that the United States is committed to Article 5, so NATO's Article 5, which pretty much says that an prior to the departure of the German Chancellor Friedrich Merz, he also, the German Chancellor did address the and by Merz and French President Macron. The two leaders also said that Europe must arm itself in an unstable world. And Germany and France also plan to increase their spending on defense to 3.5% of GDP from more than 3%. Member states are actually expected to sign off on a plan to raise their defense spending target to 5% of GDP every year. But deal with NATO to be excluded from that defense spending target. So not everybody's going to be on board with raising their spending.
All right, Chip, thank you so much, Chip. The internet's not allowing us to have this flow now. Thank you. That was Chiponda Chimbedu there telling us what's playing out in Europe. We'll get more details again tomorrow. Thank you so much, Chip. All right, so other matters now. Nigeria's Ministry of Foreign Affairs are calling for urgent action to curb illicit financial flows and push for debt relief across Africa. Speaking on the sidelines of the third G20 Shepherds meeting take place in northwest South Africa, the director of the Ministry of Global Institutions Unit, Ambassador Bibi Haman, said the G20 has a crucial role to play in advancing global stability and fostering peace. The meeting held under the theme Solidarity, Equality and Sustainability, coming at a time of heightened geopolitical tensions and rising protectionism worldwide. Take a listen. All right, and definitely we're seeing different regions now trying to collaborate at this time to, foster development and faster, better trade terms for most of the countries. And we're seeing China and Nigeria again at the forefront of such conversations. This took place in Abuja yesterday. Do take a listen.
China and Nigeria established a formal diplomatic relationship in 1971. However, this is the first time that lawmakers are prioritizing the relationship to the level of holding a sustainable bilateral trade and investment summit towards legislative agenda on ease of doing business.
CEOs of international and local indigenous companies here present.
The host, the chairman of the Committee on Nigeria-China Parliamentary Relations in the House of Representatives, Honorable Jafaru Yakubu, sees the realities of global trade as a major driver for this meeting and promises that it's a gathering like no other.
At the end of the summit, the solutions that will be profiled will be a recommendation through this committee into the House of Representatives through the committee, where we'll put it as a bill and present to the House, which will be sponsored by this committee, to see how we will foster and make business a free flow of business between Nigeria and China.
But China's total removal of tariff on goods from 53 African countries, Nigeria included, presents a huge opportunity to boost export revenue. The lack of developed products remains a deterring factor.
China is now Nigeria's largest trading partner, and a major provider of infrastructural financing. However, while in this trajectory has been beneficial in many aspects, it is not without asymmetries. First, the trade imbalance between our two countries is very glaring. Nigeria exports primarily raw materials, crude oil, and agricultural produce, while importing value-added goods such as machinery, electronics, and manufactured goods from China.
It's no longer as ancillary, it is now strategic and central.
Nigeria's President Bola Tinubu is represented by the Director General of Nigeria-China Strategic Partnership and Globalization, Joseph Tegbe. He gives executive backing to balancing trade and better relations for both countries.
Collaboration is a shining example of how legislative support can align with executive action to yield enduring value for the nation. It's a positive proof that growth of one arm of government need not come at the expense of the other. Rather, as in this case, when aligned in purpose, they can be formidable partners in progress. Partnership is not a think tank for theory. It is a mechanism for coordination and execution, working under the mandate of Federal Executive to translate strategy into results.
It's an honor to stand before such
For China, there are areas to be explored.
The future of Nigeria-China economic cooperation, especially in the context of the Nigeria-China Sustainable Business, Trade and Investment Summit.
The meeting and agreement here is beyond the public sector. Active members of the private sector from both Nigeria and China say they will work for a more balanced relationship.
I would say hydropower capacity in 2024. We've seen Africa added about approximately 2 gigawatts of new hydropower capacity, doubling the previous year's figure as governments and developers race to harness the continent's vast water resources. But despite the surge, access to financing remains a significant obstacle, with many projects still vulnerable to cost overruns, credit constraints, and investor hesitation. We see the expansion driven largely by sizable developments in Nigeria, Uganda, and Democratic Republic of Congo, and Tanzania marks a major stride towards clean energy goals and improved grid stability. Yet analysts warn sustained progress depends on fresh funding models and stronger financial backing to de-risk future investments. Well, let's get a check on what's playing out with other markets that we track now. We're seeing it's green on the screen again with the crypto market, with Bitcoin there challenging the 107,000 level by $166, 1.93% up. We see Ethereum also up there, 0.67%. XRP, 0.97%. We did get some kind of cryptic comments there from one of the leaders at XRP there, and we're seeing the price reaction, 0.97%. I was also seeing top cryptocurrencies, the top 100, that's on CoinMarketCap, also in the green. But the likes of Tron, Cardano, Sweet Token, XLM, they're not doing too good. They're red, at this point. XLM not following XRP like it normally does. That's in the red there, with a few pockets of stable coins also in the red. And we're seeing investors react to what played out yesterday with Fed Chair Jerome Powell there addressing Congress on why, on the state of interest rates and inflation in the country and employment. And definitely he did say that not more than maybe 2 or 1 rate cut. At this point he wasn't able to commit to multiple rate cuts, and even for the next July meeting, there seems it's also going to be a hold at this point. So there seems to be some kind of maybe a division, if you call it that, with the U.S. Fed members there, because some that used to be hawkish are now turning dovish, at this point. So they are seeming to aim for cuts, this year, but who knows if that's going to happen. I would say Jerome Powell there, he's still monitoring what's playing out with the tariff the tariff issues in the U.S. and, some analysts fearing that that might actually lead to more inflation, in the U.S. But we've not seen that happen yet. Inflation still, the data is still looking good, in the U.S. But we're seeing investors react, differently in different markets right now. So I guess this is acting as the digital gold. At this point, we're seeing gold that has paused that run that we've seen for a couple of months now. So Bitcoin is trying to hold up after falling below the $100,000 level over the weekend when we got news there about escalation in the Middle East there with tension. So we're seeing Bitcoin recovering back, and some of the major altcoins that dropped double digit when we got that news over the weekend. So things are turning quite a lot, in this markets that we track there. And we see Ton coin, that's the one with the Telegram ecosystem there. Ton, that's in the red right now, and definitely that's on the back of, most of the pullbacks that we're seeing in the market, at this time. But let's see if we can have a conversation with Rume Ofi, at this point. Rume, can you hear me? Hello, Rume. All right, so yeah, we'll try again, at some point. But definitely we're seeing the sentiment in the crypto market looking much better, at this point. But the big question now is the markets that are moving at this point. Will this continue throughout the week? Because yeah, we're still watching, investors still watching what's playing out in the Middle East at this point, and also conversations coming out on the interest rates trajectory and the dot plot in the U.S. Well, that's much we can take today. Thank you for watching. Definitely we'll bring you more updates tomorrow, and hopefully we have a better, connection with our guests tomorrow. That's the show today. I'm Ladi Williams from me and the team right here at Channels HQs. Bye for now.